So Damian, what are you excited about for the Asian region in 2019 and beyond?
Yeah, I think over the next 12 months we'll continue to see development in the four key secular trends that are driving growth in Asia. And they are consumption, trade, infrastructure, and technology. And as we both know, rising wealth is generating consumption spending in the region, and that's helped by the fact that we've got high employment levels and wage growth. And the middle classes, which are the key market for the consumption of goods and services, are rapidly expanding. And by some accounts, 90% of the next billion people that enter the middle class globally are going to live in Asia.
And that growing middle class is fueling consumption, as you've said, in the region, and that consumption is increasing trade within the region. Asia's largest trading partner is, in fact, now itself. And what Asia is trading is changing. Asia used to very much be a tech hardware region, semiconductors and even things as basic as hard disk drives. But that's really changed over the last few years. We've seen the growth of strong online consumer companies, whether that be online gaming, online shopping, allied to continued strength in semiconductors, for example. Asia is really now a hub of innovation and research.
That's right, and when we think about the way that Asia is approaching their research and development and innovation, one of the areas that I've focused on in my research is looking at how companies are dealing with higher labour costs and rising raw material prices. Increasingly, I think they're focused on ways to mitigate that using technology. And so whether it's companies that are either providing solutions that offset those rising input costs, or whether it's the companies themselves that are able to adapt in a better way than their peers, I think they offer us very interesting investment opportunities. Robert, we've discussed some of the opportunities in 2019, but obviously there are going to be some risks that we need to keep our eyes out for too.
Yeah, Damian, a number of the factors affecting Asian markets have changed over the last 18 months, and many of them not for the better, sadly. So if I think of things like the easy liquidity environment we had from central banks, the good earnings momentum we had, low bond yields, and cheap oil prices, almost all of those have moved in the wrong direction over the last 18 months. Most of the central banks are either slowing their liquidity programs, some of them are even stopping them, in many cases they've even been reversed, we're getting higher interest rates now. The good earnings momentum we had has faded away from a number of markets, which is another headwind. Moving beyond that, bond yields are higher, resulting in higher discount rates and lower equity valuation. And finally, not only that, but oil prices are higher. This matters particularly for Asia because almost every economy in Asia, with the notable exception of Malaysia, is an oil importer. There's actually been a bit of a double whammy for the region because not only is the oil price higher, but you pay for oil in dollars, and the dollar is much stronger than it was a year ago or even a year and a half ago.
Yeah, and that's a good point about the dollar as well, because investors often think about what's happening with the US dollar because historically there is an inverse relationship between dollar strength and Asian equities, and we certainly saw that in 2017 where the dollar weakened and coincidentally we saw flows into the region. And latterly, as the dollar has strengthened this year, that's also coincided with flows out of the region. So undoubtedly, that's something that investors have been focused on as well. But the guess front of mind headline grabbing this year has been the trade war between US and China. And I guess while we're cognizant of the risks around that and certainly the challenges to the global economic order that we've had for the last 10 or 20 years, it's certainly not the thing that we're most worried about today. And I think your point about monetary tightening is certainly the thing that we're most worried about and how that withdrawal of liquidity will affect global asset classes.
That's a good point, but those higher interest rates are already to some extent reflected in equity prices. So Asian equities are trading below their 10-year average multiples, and they're actually at about a 25% discount to developed markets. So for those that can afford to take a medium to long-term view on markets, Asia actually offers some attractive valuation potential and strong economic growth. Damian, is there anything you think people are neglecting at the moment?
I'm not sure whether neglect is the right word, but just wonder whether people are front of mind the opportunities that the Greater Bay Area Development Plan will offer investors. This is an area that covers Hong Kong, Macau, Shenzhen, and 9 other major cities in the Pearl River Delta area of Guangdong province. It only accounts for about 5% of China's population, yet they generate 12% of the country's GDP.
Specialisation in economic geography really matter. So China's top 3 smartphone manufacturers are all based in the Greater Bay Area now. Not only them, as we talked about earlier, Asia's not just about tech hardware anymore. So we're seeing some of the big social media giants base their head offices in the Greater Bay Area. And with them come other companies. We're seeing the financial services companies getting more interested in tech. And they want to spend on things like cloud computing, machine learning, and big data. So it's really creating the Bay Area as a specialist hub in China.
That's right, and specialist hub is a great way to describe it, because that sort of clustering, I think, brings to mind some of the successes we've seen in other parts of the world, and the San Francisco Bay Area is an obvious one where many of the world's most successful companies are based. So I think there's a very exciting opportunity that's before us here in this development plan, and for bottom-up stock pickers, I think it should be a rich seam of opportunities.